Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 2 of August 2026. Adani Group's massive investments in infrastructure are proving advantageous for various publicly traded companies. These affiliates are not only seeing significant growth in their order books, but also witnessing an upsurge in stock valuations. With a focus on expansion, Adani considers these businesses as essential collaborators, driving progress in the engineering and technology sectors and transforming revenue streams across multiple industries. Singapore-based Jungle Ventures has increased India's share of its capital deployment to nearly 70% and expects to invest $200 to $300 million in the country every 2 years as it shifts almost all new investments towards artificial intelligence and advanced manufacturing. Founded by Amit Anand and Anurag Srivatsava in 2012 with a $12 million debut fund, Jungle typically prefers main funds of about $400 million, which it deploys across 20 companies over 2 to 2.5 years. Its 2022 vehicle comprised of $450 million main fund and $150 million in separately managed commitments. Jungle manages about $1.5 billion. The International Finance Corporation has invested Rs 225 crore in NDR smart spaces. This investment will support the development of 20 million square feet of warehousing infrastructure. The project focuses on Tier 2 and Tier 3 cities across India. NDR smart spaces will also develop cold storage facilities to address supply chain gaps. This initiative is expected to create approximately 24,000 direct jobs. In response to the increasing complexity of cyber threats, companies are ramping up their recruitment efforts in cybersecurity. There is heightened focus on acquiring specialized skills in cloud security and artificial intelligence, reflecting the urgent need for professionals in these areas. Over the past year, the demand for cybersecurity experts has surged, with businesses increasingly turning to automation and AI to streamline their security operations. The Reserve Bank of India's special window, which offers high tax-free returns on dollar bank deposits of non-resident Indians, may close well before the scheduled deadline of September 30th, as robust inflows have started raising concerns about reversal risks. Nobody expected this volume of inflows in such a short time. Inflows under the special foreign currency non-resident bank window might touch $50 billion this week. The RBI may discuss closing the window once inflows reach around $50 billion. The central government is set to announce the first cohort of venture capital or VC firms shortlisted as second-level fund managers or SLFMs or investment partners for the Rs 1 trillion Research, Development and Innovation or RDI fund over 6 months after Prime Minister Narendra Modi launched the scheme, which received the Union Cabinet's approval in July last year. Top VC firms, including Ivy Cap Ventures, Specialai Invest, Chirate Ventures and Kalari Capital are among the first cohort shortlisted under the scheme. The cohort, comprising nearly 20 alternative investment funds or AIFs, is expected to be announced this month. This is likely to be followed by a second cohort announcement in October to November this year. The deadline for submission of applications was January 31st. In a bold move, retail investors invested a whopping Rs 18,000 crore in 6 blue chip stocks that were on a downward trend. They scooped up shares of Infosys, Reliance Industries, TCS, Wipro, HCL Technologies and ITC during the June quarter. While retail players flocked to these tech stocks, institutional investors were offloading their shares. The much-awaited Milky Mist Dairy Food IPO opened for subscription today, August 11th, giving investors a 3-day window to place their bids before the issue closes on August 13th. The rupees 1,553 crore IPO has already attracted investors' attention, with its grey market premium or GMP currently hovering around 15% above the upper price band of rupees 140 per share. If the trend continues, the strong GMP could indicate healthy listing potential for the stock. As September 30th approaches, 34 companies are hustling to roll out the initial public offerings to bypass further regulatory hurdles. The goal is to raise around Rs 45,000 crore from these offerings. Bankers remain hopeful amidst the market's unpredictable nature and tight time frame. Additionally, numerous other companies are planning their entries into the public offering landscape in the near future. In recent years, artificial intelligence or AI in India's real estate sector was largely confined to the customer-facing side of the business. Virtual property tours, chatbots answering buyer queries, personalized recommendations, and smarter digital marketing were among the first applications developers experimented with. That was the easy part. Now a much bigger shift is happening behind construction barricades, inside project offices, and across boardrooms, where developers are increasingly relying on AI to decide what to build, when to build it, how much it will cost, and whether a project is likely to run into trouble long before delays begin to show up on site. The opportunity is massive. India's real estate sector is currently valued at $650 billion, projected to become a $5.8 trillion industry by 2047. The Institute of Chartered Accountants of India or ICAI has opened the Multi-Purpose Empanelment Form or MEF for the 2026-27 period. Chartered accountants and CA firms can now apply for empanelment opportunities with various authorities including the RBI, NABARD and CRCS through the official MEF portal. It is crucial for applicants to read the advisory before submitting the details to ensure accuracy. The deadline for online submission is 29th August 2026. JLL Business Services has opened a Global Capability Center or GCC in Hyderabad, strengthening its operations in India and adding to the city's growing base of global capability centers. Telangana IT and Industries Minister D. Sridhar Babu inaugurated the facility, which spans 120,000 square feet across 2 floors at Prestige Skytech in the financial district. The center is JLL Business Services' second hub in India after Gurugram and is expected to create more than 1,600 high-skilled jobs over the next 2 years. The facility will support JLL's global operations through standardized processes and technology-enabled workflows. The new Global Capability Center or GCC model is increasingly smaller, leaner, and engineering-led, with companies building specialized teams around AI and product engineering rather than focusing on scale and headcount. IT industry body NASSCOM's data shows more than 420 GCCs in India have parent firms with revenues of less than $100 million, pointing to the growing presence of smaller enterprises in the GCC ecosystem. A growing trend favors technology, product development, and niche capabilities. Tata Sons chairman N. Chandrasekaran has discussed the possibility of stepping down ahead of the August 18th AGM amid uncertainty over his reappointment as a director and tensions with Tata Trust chairman Noel Tata. The AGM itself faces uncertainty after the Maharashtra Charity Commissioner suspended Sir Ratan Tata Trust or SRTT from decision making. Axel, an early backer of Flipkart, Swiggy and Urban Company, has raised $550 million for its 9th India fund, about 15% lesser than its Fund 8, as the venture capital firm looks to continue to focus on investments in deep tech, manufacturing and AI. It joins a list of large venture firms in India that have downsized their latest funds amid a reset in the industry due to fewer local opportunities in the artificial intelligence space. The Silicon Valley headquartered VC firm is betting on India's IPO-led liquidity opportunity. Axel aims to invest early and help companies scale to $1 to $2 billion plus businesses. Portfolio companies such as Zetwork, Infra.Market, Acco, Curefit and Spinny are among those in the pipeline to go public over the next year. Gold loan company Manapuram Finance announced a leadership change, effectively transforming it from a family-run business to a professional-led model, following Bain Capital taking up joint control with the promoter's family. VP Nandakumar, who has been spearheading the company as managing director since way back in 1992 when it was incorporated, will step down from executive role and become a non-executive chairman from January 1st, 2027. Larsen & Toubro is transferring its data center and cloud services business to Vyoma.ai. This significant restructuring involves Rs 1,400 crore slump sale agreement between the two entities. The deal proceeds will be paid through the issuance of fully paid equity shares. Additionally, L&T will transfer its entire stake in L&T Network Services Private Limited. This transfer to Vyoma.ai is valued at Rs 30 crore and also paid via equity shares. Modern Bazaar is in talks with Reliance Retail, DS Group owned Les Marches, and two other premium chains for a strategic equity partnership or majority stake sale, even as its promoter says the business is not for sale. The gourmet grocery chain is battling falling store sales, quick commerce competition, rising overheads, and pending vendor payments. Canada Pension Plan Investment Board or CPP Investments has entered into a binding agreement to invest up to Rs 3,000 crore in Prestige Estates projects wholly owned hospitality subsidiary Prestige Hospitality Ventures Limited or PHVL for an aggregate stake of up to 28%. The investment will be made through multiple tranches and will comprise a combination of primary and secondary investment as mutually agreed between the parties under the definitive documents. India's largest conglomerate is reeling from the shock resignation of its chairman, who leaves a vacuum just as the Coffee to Cars group executes a massive reinvestment program over the next 5 years. Natarajan Chandrasekharan's decision to step down in February jeopardizes Tata Sun Private's $120 billion wager on future growth and brings an abrupt end to nearly a decade of leadership that helped push India into more advanced technologies. Some of the conglomerate's current and planned projects could slow down, be scaled back, or stretch out longer as it awaits new leadership. Muthoot Fincorp filed draft papers with SEBI for Rs 3,000 crore IPO. The company aims to strengthen its capital base and fund business growth. Its gold loan business has seen significant expansion over 2 decades. Muthoot Fincorp reported increased profits and revenue in the last fiscal year. The diversified NBFC operates a large branch network and digital platform. South Indian banks have seen their gold loan portfolios nearly double in 3 years. This significant growth is driven by rising gold prices and increased demand for credit. Federal Bank, CSB Bank, and others experienced substantial portfolio expansions. CSB Bank recorded the fastest growth, more than doubling its gold loan book. Gold loans now represent a significant portion of advances for these regional lenders. Swiss private bank Julius Baer Global Enterprises Services India has picked up over 74,037 square feet of office space in Mumbai's western suburb Andheri East through a 60-month lease at Waterstones Business Park. This transaction highlights sustained demand for Grade A office spaces. Kia India plans to expand its manufacturing capacity to meet future demand. The automaker targets annual sales of 410,000 vehicles by the year 2030. Kia will introduce 10 new vehicles, with 8 being electrified models. The company is also expanding its network into smaller Indian cities. This expansion aims to serve both domestic customers and increase exports. Bengaluru authorities sealed a Zepto warehouse for hygiene and labelling violations. The Food Safety Department conducted inspections following numerous public complaints. Hotels also face scrutiny, with expired products and unhygienic storage discovered. Over 100 kilograms of food articles were seized from several establishments. This enforcement drive now extends to quick commerce warehouses across Karnataka. Bank of America Corporation will invest up to Rs 18,268 crore for a stake as much as 49.9% in Geo Credit Limited, the wholly owned lending subsidiary of Geo Financial Services Limited under a definitive agreement. The US bank will come in as a joint venture partner through a preferential allotment of equity shares and warrants in the non-banking financial company. The transaction gives Bank of America an initial equity interest of 26.5%, which rises to 49.9% if the warrants are exercised in full. It is subject to regulatory and statutory approvals. Pirojsha Godrej is set to take charge of Godrej Industries Group, succeeding Nadir Godrej with a mandate to build sector-leading businesses and more than double the group's valuations in 5 years. He plans sharper capital allocation, greater investment in businesses with scale potential and closer scrutiny of underperforming businesses. During the June quarter, leading international funds encountered remarkable gains with Indian equities, significantly boosting the reported portfolio values. Their strong performance exceeded that of key Indian stock market indices, primarily driven by astute investments in mid and small cap companies, reinforcing India's reputation as promising landscape for discerning stock pickers. Government debt servicing remains positive, with loan accumulation below GDP expansion. However, irregularities worth Rs 603 crore were found in the export incentive scheme. Inadmissible benefits and systemic failures led to significant financial gaps. The tax dispute scheme also showed lapses in calculations and revenue recovery. These issues resulted in prolonged delays and revenue losses for the government. Rates to cover risks such as fire, cybersecurity breaches, and professional liabilities declined by at least a sixth in the June quarter. Data from Marsh India showed, reflecting abundant domestic and overseas capacity that undercut pricing. Cyber insurance rates fell 25 to 30%, fire insurance 19%, professional indemnity 20 to 25%, and directors and officers liability 15 to 20%, data showed, underscoring the broader profitability challenges facing the non-life insurance business and risk distribution. In India, a majority of learners utilize artificial intelligence tools in their daily lives. Nonetheless, the journey towards creating AI-driven solutions is still in its infancy for many. As a result, enhancing AI skills has become an essential aspect of career development. Students frequently encounter obstacles in improving their AI knowledge and locating trustworthy resources. This pattern is evident across various city tiers throughout the country. Aditya Birla Group companies will pay a brand royalty starting June 2026. A 0.25% revenue royalty is mandated, capped annually at Rs 225 crore. Grasim Industries expects royalty payments well below the established ceiling. Hindalco and Novelis will also adopt this new royalty payment structure. This transition marks a move towards more structured corporate governance practices. Uber and Rapido explored combining their India ride-hailing operations in May, but the talks collapsed after the two sides clashed over how the tie-up should be structured. The discussions unfolded during Uber CEO's India visit, when the two sides floated very different visions for the deal. Both companies have been burning cash to compete for the same riders and drivers, and a tie-up could have eased the pressure while creating a stronger single player. This isn't Uber's first India consolidation move. It sold Uber Eats to Zomato, now Eternal, in an all-stock deal in 2020 after concluding it couldn't become a top 2 player in food delivery. Mobility, however, remains a market Uber considers strategic and is unwilling to exit. India's public sector, initially built for industrial necessity, is now undergoing a significant transformation. The government is increasingly selling stakes in state-owned companies to raise capital. This shift reflects a changing role from direct ownership to strategic shareholding. Public sector enterprises remain vital in key strategic and infrastructure sectors. The future focuses on optimizing ownership rather than complete divestment. India's oldest listed companies offer a rare window into the evolution of Indian business, markets, and capitalism. From Bombay Burma Trading Corporation, founded in 1863, to Barmer Lowry, Bombay Dyeing, Britannia, ITC, Tata Steel, Kirloskar Brothers, and Century Textiles, these vintage stocks survived colonial rule, independence, liberalization, and the digital era by adapting, diversifying, and redeploying capital. Reliance Industries and Rolls-Royce will partner for India's advanced combat aircraft engine. They plan to establish a dedicated aerospace gas turbine complex in India. This alliance combines Rolls-Royce's engine expertise with Reliance's manufacturing capabilities. The goal is to build an end-to-end Indian capability for aero engine development. This initiative supports India's strategic autonomy and defense manufacturing goals. The Sir Ratan Tata Trust faces curbs, impacting Tata Sons' annual general meeting. The Sir Dorabji Tata Trust noted a lack of quorum for the upcoming meeting. N. Chandrasekharan may continue as director until a valid AGM is convened. Some trustees individually sought relief from the Charity Commissioner. An inquiry into a 1989 share transfer is also underway. Thermo Fisher Scientific is amplifying its investment footprint in India, driven by the strong anticipated growth in the biosimilars and innovative medicines sector. With projections indicating a substantial rise in India's biosimilars exports by 2030, local pharmaceutical companies are pivoting towards advanced biologics and research initiatives. To foster scientific talent, Thermo Fisher has also established a bioprocess center in Hyderabad for comprehensive training. The government has opened a limited disclosure window for taxpayers to regularize specified foreign bank accounts, overseas property, jewelry, artwork, shares and securities and other foreign assets, as well as undisclosed foreign income with Rs 1 crore and Rs 5 crore eligibility thresholds under two separate routes. The Foreign Assets of Small Payers Disclosure Scheme Rules 2026, notified by the Central Board of Direct Taxes on August 14th, will come into force on August 16th. The first route covers undisclosed foreign assets and undisclosed foreign income with an aggregate value of up to Rs 1 crore. Taxpayers opting for this route will have to pay 60% of the declared value, which would be 30% tax and a penalty equal to the tax. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai